Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com and the Big Four Accounting Firms YouTube channel. Before we get started, just wanted to remind everybody to support us if you have a chance or if you can. Even $1 helps, and we have a link in the description to a website called Buy Me a Coffee. It's just a way to donate to us and support us. Again, any amount is helpful so that we can keep putting out content. And there's also other ways for you to support us in the show notes to this podcast or on YouTube in the description. In today's podcast, we're going to continue the recent theme on here of focusing on cryptocurrency and blockchain, just because I think it's an interesting area for multiple reasons. But another thing I was thinking, we're going to cover a news story today from Accounting Today. But before we get there, I wanted to also, another reason that crypto is interesting to me is because it doesn't really create independence issues for Big Four accountants. So it's a way to invest. And I'm definitely not giving investment advice here, but it's a way for a Big Four accountant to invest and not worry about having independence issues. Because when you work in the Big Four accounting firms and you make your way up the chain, you have to be independent. And a lot of times this means you can't invest in the assets that you think are going to go up because they're the client of the firm that you work at. Where cryptocurrency, you don't really need to worry about that for the most part because they're not really going to be a client because it's decentralized, especially with Bitcoin where there's no really known person behind who created it. So I think it's just an interesting opportunity for accountants, not just for an area to work, but also just for them to invest in areas where they feel like it's going to go up. And obviously this week crypto's done pretty bad, but I think that's another reason why it's just interesting at this point, because if you think it's going to go back up, be an interesting way to invest. So that's one area, but it's not just accountants that should be investing in crypto, right? Like other people are investing in it, and that's what created this article for Accounting Today. They talked about how the title of the article, which I'll link to in the show notes, is Decrypting Crypto Opportunities and Obstacles for Accountants. And it really talks about how there's opportunities for people to grow practices, and there are businesses that are being created. And there's multiple accounting firms that are reviewed in here. A lot of them are smaller, but they even interview a guy at Deloitte who talks about the valuation with regards to taxes and how it could be difficult to value them. CBiz, which is also a larger public accounting firm. Not only a public accounting firm, but they're actually publicly listed. But so there's a lot of things going on with crypto, and there's a lot more work to be done with accountants because you have to account for this as more investment companies are investing in crypto, and some of those investment companies are solely invested in crypto, like that firm that we talked about with KPMG, how they bought their CoinMetric solution. That was a crypto hedge fund. So there's going to be very large businesses and funds that are only focused on crypto, and they're going to need accountants. So it's only going to grow, and the accounting opportunities are going to be there. And this article also says that 15% of Americans own cryptocurrency. And richer people are going to get involved in this area too, because it's just it's another thing to invest in, and everybody tells them to diversify. So they're going to diversify into cryptocurrency. It's going to create a lot of issues they're not aware of, and they're going to need accountants. But this article really lays it out. It really lays out like all the issues. It has a survey from this firm called Blocks, and Blocks is an accounting firm focused on cryptocurrency, which is pretty interesting. And their survey found that there's various issues. Some of them are missing or inaccurate data from clients. Another one is lacking disclosure of assets and transactions for tax reporting from both businesses and individual clients. Another one is miscalculations of capital gain for the P&L when analyzing transactions. Another one is manual tracking of user or business data account information. So that's a crypto accounting firm doing what the Big Four do, which is create a survey to raise awareness of issues so that clients will, give them some money and use their service. But they weren't the only one in there. There was another company, Luca Tax, and they create a virtual currency tax preparation tool where it basically works in the background to help you complete all your an accurate record of your crypto asset transactions. It standardizes crypto tickers because what this article says is there's a lot of different cryptos, but across the different exchanges, they have different tickers, and it helps them to track all of that, and it puts it on the 8949. And I mean, the big four accounting firms utilize these tools when they're doing their tax reporting for clients. But it's also, there's tons of software companies out there that have these capital gains trackers, and it helps you input the information into your 8949 or your compliance tools. And so now there's firms already out there building these tools for cryptocurrencies, which is very interesting. But there's a lot of issues that come out of cryptocurrency accounting, as this article says, because it's not treated like a currency. A lot of times it's treated as a capital asset. So you have to track it in a different way. Basically, every transaction that you do could potentially result in tax. And so like people have to consider that, because sometimes you might just be moving wallet to wallet and it's not really a sale. And so you have to be careful. You have to make sure you track that and report that. And on top of all this, the federal government in the U.S. today came out and said that they're going to regulate more. That they're going to make people report transactions of over $10,000 worth of cryptocurrency. So there's going to be more of that. There's investments in the U.S. into the IRS with regards to cryptocurrencies. I mean, it's going to take the IRS forever to get up to date on all this information and then actually go after people. But they're going to do it the way they typically do it, which is try and make one big case, put that in the news, and hopefully that scares everybody into compliance. So that's one area of regulation. But also with the recent swings in cryptocurrency, the federal government there's people in the federal government, and I'm sure it's not just in the US, I'm sure it's globally, where they want to regulate cryptocurrency because they don't want the average Joe to get ripped off. But I don't know how you do that, because the federal government is not, that's the whole thing with decentralization. There's no central place to attack. And I mean, typically governments go after places like banks. And in this case, they can go after an exchange like Coinbase or Binance. But some people don't hold their cryptocurrencies in those. So that's where the government's going to run into problems. But not only that, it's going to, like, let's say they do go after the exchanges and they do go after individuals, they're still going to have to be knowledgeable enough to actually track those people down and track them down to a physical address. And so there's more to come on that. But also the government, and putting all this out of there, they just put more on their plate. The IRS without cryptocurrencies is already behind on collecting taxes, auditing people. And another thing that confuses me with regards to the blockchain and crypto area is crypto solves a lot of problems with the social injustice that all these world governments talk about, because a lot of people have trouble getting getting bank accounts because of certain requirements that banks ask for, where to get a lot of these cryptos, you don't have to go through all that, and to exchange wallet to wallet, you don't have to go through all these crazy things. You don't have to wait a long time. There are fees associated with it, but I think it's just very interesting. It solves a lot of the social justice issues that these governments and these institutions talk about. But I think, it's obvious the reason the governments don't like it is because governments like to regulate. They like to have power. If you decentralize the way people transact with each other for business and take out the government, then they start getting worried. So there's going to be more government regulation here. And we know whenever there's more government regulation, more compliance, the big four accounting firms are going to make more money. So this is just a completely interesting area. And if you're an accountant, it's definitely interesting because it's only going to grow, because it combines two very profitable areas, which is finance and technology. And a lot of the people that we used to maybe going to investment banking, used to go to Silicon Valley, are going to probably combine those and go into cryptos. So the smartest people are going to keep going into this field. It's growing. Otherwise, the governments wouldn't be talking about it every day. And so this is just a growing area for people to look into. This article lays out accountants' roles in helping their clients. And it also helps understand cryptocurrency a little bit more in case you're not very familiar with it. And it also encourages people, obviously smaller accounting firms, at the end to actually buy some cryptocurrency so they can see how it works, so they can advise their clients. I would advise you to do that too. I mean, it tells you to do a small amount, which I would agree with. But again, I'm not giving investment advice here. It's just so you can learn about it, get educated, because this is only a growing area. And getting involved in these growing areas in the accounting firms in the beginning, it gives you a better opportunity to be partner, because it's the faster you can get revenue under your name, the faster you can make partner at the big four accounting firms. And the faster you become technical in a growing area, the more the accounting firms are going to push you in front of clients so that you can sell them more services. So it's just something to keep an eye on. Again, I see it as a convergence of technology and finance, which are two very profitable areas for the accounting firms. And we see this with E&Y right now, where they have a blockchain conference and there's news coming out of that. So the government is trying to scare people away from using cryptocurrencies, but it's not going to work. And the big four accounting firms are already in this, and large companies around the world are getting into this. So I think it's only going to grow. But I just wanted to keep people up to date on that. And Deloitte is mentioned in here. So we do have the big four accounting firms chiming in here in this article, but I'll link to it. That's the update for today. Make sure to subscribe to this podcast, stay up to date, and support us financially through the Buy Me a Coffee link in the show notes to this podcast. And if you can't support us financially, then subscribe to our YouTube channel, Big Four Accounting Firms. Thanks for listening.